So, today I kind of want to talk about, your financial health, understanding it, measuring it. I mean, what is it, right? And that's a good starting point, right? Like, what is financial health? Okay, well, financial health, it's going to be a term used to describe the state of somebody's personal monetary affairs. There are a bunch of dimensions to financial health, including stuff like the amount of savings you have, how much you're putting away for retirement, how much of your income that you're going to be spending on fixed or non-discretionary expenses, right? And we really need to understand this, because financial experts, they've devised kind of like rough guidelines for each indicator of financial health. But each person's situation is different. And because of that, it's worthwhile to spend time developing your own financial plan to ensure that, you're on track to reach your goals and that you're not putting yourself at undue financial risk if the unexpected happens. So we need to start by talking about measuring your financial health, right? And to get a better grasp of your financial health, you need to ask yourself a couple questions. Consider it a self assessment of your financial health. How prepared are you for the unexpected events? Like, do you have an emergency fund? What is your net worth? Is it positive or is it negative? Do you have the things you need in life? How about the things you want? What percentage of your debt would you consider high interest, like credit cards? Is it more than 50%? Are you actively saving for retirement? Do you feel you're on track to meet those long term goals? Do you have enough insurance coverage? I mean, whether it's life or health. You know, Asking ourselves these questions, we can determine our financial health. And, you know, an individual's financial health can be measured in a number of ways. A person's savings and overall net worth represent the monetary resources at their disposal for current or future use. Now, these can be affected by debt, such as credit cards, mortgages, auto, and student loans. Financial health is not a static figure. It changes based on an individual's liquidity and assets, as well as the fluctuations of the price of goods and services. For an example, an individual's salary might remain constant while the cost for gas or food or a mortgage, a college tuition, like these all increase. So, despite the good state of their initial financial wealth, the person may lose ground and lapse into decline if they don't keep pace with the rising cost of goods. Typical signs of strong financial health include a steady flow of income, rare changes in expenses, strong returns on investments that have been made, and a cash balance that is growing and is on track to continue to grow. Okay, well, how would you go about improving your financial health? Right? Maybe you're in an okay spot, maybe you're in a bad spot, maybe you're in a good spot and you want to be in a better spot. Well, to improve your financial health, I mean, you've got to first take a realistic look at where you're currently at. Like calculate your net worth, figure out where you're at. This includes taking everything you own, such as retirement accounts, vehicles, and other assets, and subtracting any and all debts, right? So, you can budget, right? And then with your budget, it's not enough just to plan for where you'll be spending, but it's also important to take a good close look at where you already spend. Are there areas where you could cut back? Recurring subscriptions that you don't really need. Like, do you actually watch cable or are you just watching Netflix all the time? It's fortuitous to understand what your needs are versus, your wants. Now, you could use spreadsheets. There's, a bunch of mobile apps to do this, just to help you set up a budget. Or, you could use the time tested envelope method, right? Where you create an envelope for each budget item, like groceries, right? And keeping the allocated cash in the respective envelope. Now, one of the major keys to a budget and, maintaining your financial health, it's to stick to your budget regardless of whether you start making more or bringing in more income. Now, lifestyle creep, which includes spending more money as you make more money, is detrimental to your final health. Really, what you want to have happen is you want to start making more money but spend the same. So if you're making, $50,000 a year and you're spending 35, and the next year you get a raise and you're making 55, you still need to be spending 35. And then let's say that third year, now you're making 60,000, but you're still spending 35, right? You don't want to start, just because you're making a little bit more doesn't mean you should spend a little bit more, because then you're always going to be even and you're never going to get ahead. And then the other thing is, making sure you have that emergency fund. Building an emergency fund can materially boost your financial health. The fund is meant to be money that's saved and readily available for emergencies, car repairs, job loss, glasses. The goal should be to have 3 to 6 months worth of a living expenses in your, emergency fund. Now, one of the last things is going to be debt. Pay down your debt. Use either the avalanche method or the snowball method. Now, the avalanche method suggests paying as much as possible towards the highest interest debt, right? Not the highest debt, the highest interest debt, while paying the minimum on all others. The snowball, meanwhile, suggests taking the smallest debt balance first and then working your way up to the largest debt balance. Now, there are obviously pros and cons of each, but you need to pick the one that works best for you and your situation, your debt load, and your money handling preferences. I personally would love for people, if they're going to do one of these, I always recommend the snowball method. It's easier to do, and before you know it, stuff just, debt starts disappearing. Okay, well, let's end on some rules and some tips and some tricks for your financial health. So when it comes to effectively, being effective at personal finance, keeping your financial health in tip-top shape, it's not always easy. We get caught up with, just living. However, there's some things that I might know or someone else might know that could help you improve or keep you in good financial health. So one of the first things is going to be to automate your bill pay and savings, right? Set up automatic transfers to a savings account and auto pay all your bills. Always look for free checking and free accounts. Shop around for insurance, cable, or other recurring expenses. This includes if you already have these items. Use a budget method. You could use 50-30-20 method. 50% on needs, 30% on wants, 20% savings, right? Now, this 20% could include debt reduction if you have high interest debts. And then try to limit spending on housing, like rent or mortgage, to not more than 40% of your income. And then, of course, as you hear constantly all the time, invest early and often. Try to put 10 to 15% of your income directly into a retirement account, right? So hopefully you guys like this video and it'll help you, work towards getting better financial health, or, at least, improving your financial health slightly over time. And before you know it, it'll make a big difference, right? But please, it's always better to do something than nothing. So I really hope you guys like this video and I hope it's helpful. If you did, smash that like button for me. If you're not subscribed to the channel, I'd really appreciate it if you did. But until I see you guys in the next one, y'all be safe.